Hello, guys. So, in this session, we are going to talk about the current state of Indian economy. Recently, there has been significant discussion about whether India is facing a major economic crisis. So, in particular, if you see, we will focus more on the challenges faced by those at the bottom of the economic pyramid. And when I say those at the bottom of the economic pyramid, this means the group which include the individuals with low incomes and also primarily living in rural areas, and their situation is very critical as they struggle with rising debt and difficulties in repayment. So let's get into the details of it, and let's start by understanding one by one. So there's a detailed PPT, but I'll try to simplify it. See, understanding the bottom of pyramid. Now, when I say the term bottom of pyramid, it actually refers to the large segment of the population that earns very little and mostly for their survival only. And these individuals often rely on small loans to improve their livelihoods because of their aspirations. And unfortunately, many are unable to repay these loans that lead to defaults. And this situation raises serious concern about the stability of microfinance institutions, which play a very crucial role in providing financial support to these people. Okay, so not only these people, in fact, they provide the financial assistance to the needy. And coming to this economic indicators like the GDP growth and the actual reality. See, guys, on the surface, if you see, India's economies appears to be performing very well over the past few years. If you take our GDP growth rate have been impressive and reported 7.1 and 8.2 percentage. But this growth does not always translate into better living conditions for everyone. So when we talk about growth, we talk in terms of numbers, and when we talk about the living standard, we have to discuss in terms of development. So the living standard of the masses is not actually worth discussing here, and it's not that much growing at the pace of the growth rate, because that is something which are in numbers which are changing, but this is qualitative in nature and it is not changing. So GDP is rising, the sales of consumer goods are actually declining, which in fact showing that the living standard of people is not that great, which is actually indicating that the purchasing power of many people, especially those at the bottom of the pyramid, is not improving as it should, right? Because GDP is growing, so they also should benefit, and the benefit should reach to the bottom also, but it is not reaching, it is not percolating or permeating to the downside. So now, if you see the role of microfinance institutions, these institutions are basically designed to help low income individuals to access loans when traditional banks are unwilling to lend. Because if you see traditional banks, they will keep on asking you many things, your income proof, your so many proofs for getting the loans, and eventually you will end up getting nothing and only the time waste, right? But these institutions have actually faced increased pressure due to rising default at this present situation, and many of them are reporting losses instead of profits because they are not able to collect the loan which they have given back, nor the EMIs, and that is actually putting a lot of issues with their operations at risk at this point of time. And this financial strain basically highlight the critical role that these institutions play in supporting the poorest members of the society, and they are also struggling at this point of time. So it's actually helping in economic empowerment and financial inclusion and all this. You can go to the slide for more understanding. Now, coming to the regulatory changes and their impact in 2022, if you see, the RBI made significant regulatory changes affecting microfinance, and they removed the cap on interest rates that these institutions could charge. So these regulations, these deregulations was meant to encourage lending. It led to higher interest rates for borrowers. So as a result, many low income individuals are now burdened with debts they cannot repay. So, which is actually contributing to their financial struggle as well. So when RBI removed the cap on interest rate, that these institutions can change only because they can lend more at this point of time, right? So only for encouraging lending, that actually led to more borrowing also, and that borrowing comes at the higher cost as well. The interest rates are high also, and that is one of the reason for these defaults. Okay, so we have discussed this. Now, coming to the agricultural crisis and the economic distress. See, another factor contributing to economic distress is the impact of climate events such as El Nino, which has affected the agriculture production drastically because we are talking about rural areas, right? So, again, in rural areas, many rely on farming for their income. And when the crop yields decreases due to the weather patterns, farmers struggle to repay their loans. And that's obvious, and that's actually very common because they don't have any other alternative. So this agricultural crisis feeds into the broader economic trouble. So whenever agriculture is also going into trouble, because agriculture completely depends on climate, and if the climate is not good, agriculture will go bad. So rural population will be in trouble. So that leading to increased defaults and financial instability, especially in the rural areas. Now, coming to the diverse opinions on the economic situation. See, there are ongoing debates among economists about the true state of Indian economy at this point of time. And some experts argue that the reported GDP figures may not reflect the actual situation on the ground. The ground reality is totally different. They point out that while GDP is rising, other indicators like credit growth, industrial production, it suggests a slowdown. So when GDP is going up, you are only forecasting the GDP, and looking at GDP is not going to give you the actual reality, the ground reality. On the other side, if you see the credit growth is going down, the industrial production is also going down. So living standard of the people is also not that great. And if you look from the perspective of development, which it's not good, right? And conversely, if you see some optimistic voices, they are believing that the recent agriculture season may improve farmers' income and alleviate some distress. So this year, if it was good considerably, then it can improve the situations and lives of the rural population. Now let's conclude. See, the challenges which are faced by Indian economy, particularly for those at the bottom of the pyramid, are complex and multifaceted, and it cannot be discussed in this one single small session alone. See, while we see positive GDP growth, we must also consider the other realities of rising debt and economic distress among the low income individuals and their living standards. How is it improving or not, right? So, as we look to the future, it is very essential to closely monitor these trends and ensure that the economic growth benefits all segments of society. So, if it is not, permeating through the deeper level to the ones which are at the lower level of the pyramid, then there is of no use for this growth actually. So, not just the select few or those who are at the top only. Now, that's what I want to discuss in this session. And thank you for watching. See you in the next session. In case if you are looking for any mentorship program for civil services, or if you are looking for any courses, you can check the link in the description. And see you guys in the next session. Thank you so much.